Now, Charlie Parker, the investment editor at Citywire in London, has been following all that. He joins us now. Good morning, Charlie. We heard from Frédéric Oudéa there, and you've been looking into the numbers that Société Générale was putting out yesterday to defend its position. You're not really that impressed by what you've read, though.
No, well, the great difficulty is if you're going to come to the market and say, look, everything's fine, you're immediately going to leave yourself open to people saying, OK, but what's not in these numbers? What haven't you told us? And the gist of Société Générale's defence is, look, we've got loads of really high-quality assets we own here. If we are forced to raise money in the short term to keep ourselves afloat, we can lend that to people, they'll give us cash and we'll carry on. Problem is, they haven't really told us what those high-quality assets are. And for that reason, people are saying, you know what, it's a good defence, but it is sort of spin. And people don't like spin from banks after the last few years.
And SocGen and BNP, Charlie, they've been quite vocal, haven't they, on how they're trying to move their short-term funding positions, because US lending obviously drying up. Do you think that's their best strategy?
I think it's probably their only strategy, but it doesn't really take away from the fact that what people are worried about here is not just a default in Greece in its own. They are worried about a credit crunch in Europe. They are worried that the Eurozone crisis could trigger a scenario where banks didn't want to lend to each other. Now, if that happens, the reality is Société Générale and the other French banks are using short-term funding still more than others, and that means they would be in the front line of that crisis. If that scenario materialised, we know the French banks would be hit first, and they can try and get themselves out of that situation, but they still are at risk of that.